If it ain't 6, I ain't pulling over.
Now, let me say this. Now, there's two scenarios where Brother Cotton is on point. The
Okay,
first
shoot to me.
scenario
Shoot.
is if they when you get your oil change with a
Uh huh.
synthetic oil and
Yes,
they give you the sticker,
and it
if
says
they
three
don't
thousand
put it
miles.
in if they don't put it in properly and
Right.
they give you 3,000 miles,
Mm-hmm.
then that's an issue
It
Okay.
because you
is.
paid
Okay.
synthetic, but they only giving you half the time to come back.
And they
So
do
that
it
might
all
be
the
Exactly.
time.
Right. Right.
now. Now, now the second thing is
Okay.
that if you got a actual mechanical issue and you still trying to wait for them
Ah.
synthetic that 6,000, it's best to at least go look at it. I know what
Okay.
you saying. It
Okay.
ain't been 6,000 miles yet, but my light on. If it
But
say
my light
change
don't come
oil
on.
soon,
Like
if
Larry
it say
said, it
if it say
notifies you.
change oil soon,
Right.
and you just went last week and
Last
got your
week,
oil
brother,
change,
and you drove that
that
much.
that's a problem because you need to go and at least let them check it, or they didn't reset your system when
Right.
they changed your oil, so you still running on something that's faulty. So those are the only two scenarios that I would be like, okay, that might be an
Right.
issue. But anytime you get changed oil soon or anything, if your dashboard got look like a Christmas tree, go get it checked out.
Now,
But
if you're talking
I
about
like
check
all them
engine
lights.
light, if your
I
check
like all
engine
them
light
lights.
comes on, yeah, okay, get that check immediately.
right.
But if you don't ignore it, it's gonna go away. I'm gonna wish it away.
I'm gonna just
But if
unplug
it
that battery, plug it back up. Now it's gone.
but
Hey,
but
it's
I'm
only
getting at it.
gone temporarily though.
Now it's
Temporarily.
gone. The pain is
Yeah.
gone.
See, Kaneem, you recognize the urgency and
Uh-oh.
when it
I see you
comes to
going
when you
somewhere.
see you being notified it's time to change the oil, you're gonna go
You
ahead
going
and do
somewhere.
it, right?
Uh-huh.
Yeah,
So
because
Uh-huh.
if you look at it, now, this just for
why?
your own personal information. So when you get any indicators on your dashboard, it's
Uh-huh.
a certain range. It's a plus minus range that you need to stay in. So in
Let's
that
see.
range, you got a
I'm
20% factor of where
I agree.
your light can come on. So if
Uh-huh.
it come on, it could be too much, it could be too little. But in that range, you want to stay in there because if you out of that range for 20% of your drive time, then that light gonna come on. Period.
Right.
Point blank. I don't care. It could
Sure.
be brakes, gas. It could be oil. It could be air conditioning. It could be intake. Whatever it is out of range. So you want to
Right.
figure that part out. But
so
anyway,
So
why
go
you
ahead.
so
Go ahead, brother
why you
Larry.
bring this up, Kaneen?
what I'm
It has
Yeah.
saying
to
here
do with
is
Why,
what I'm
Larry?
saying, the general consensus. AD, did I get you? Did I let you weigh in? Did I let you weigh in, AD? I'm gonna assume you on.
I weigh in with an asterisk. I don't know where we're going with it, brother. What's
Here you go. I'm noticing that the brothers here and Earl and Brian. I'm gonna just loop you guys in. That we all recognize the
uh-huh.
urgency. That okay,
Yes.
we're
Uh-huh.
the car is telling us that we need to do it. Thomas may
Uh-huh.
say, "Hey, I got full synthetic." And I didn't hit 6,000 miles yet. I'm gonna go
Uh-huh.
with that. So that means he's paying attention. He understands.
Wait, you see how he did the Malcolm X? He paying attention. They understand what's
Right,
going
right.
on in
You're
society right
using his
now. Understand
medulla
what's happening.
oblongata. Masters of tell him what's that master's name, Thomas? What's that master's name?
Justice involved care.
Look
Yeah,
at
that's
But
what
you.
I'm
but it's in systems
you know,
change. That's what it's in. Systems
here we
change.
go.
System. Like the light come on.
Um
Why
now
is
one of the things
it
I don't do either is when your air pressure
Yes.
lights come on
yeah.
for your tires.
Uh-huh.
Put some
Uh-huh.
air in your tires. The
Uh-huh.
tires are on the ground.
No
Them
doubt.
things are
Okay.
most important.
Immediately.
Hey,
So
if you change your tires, don't change one at a
are
time.
we are responding to this. So
Right. Wait a minute.
I get in a
Say that.
vehicle that I don't drive. I don't
Uh-huh.
drive this vehicle on a regular basis. Somebody
Uh-huh.
else drives this vehicle on a more
Preach,
regular
brother.
basis
Yes,
or
Right.
sir.
whatever. And I get in the car and I see it. I'm like,
Uh-huh.
whoa, how long have this light, this sign
This
been on?
indicator been on.
I
Okay.
just ignored it. I'm like,
Uh-huh.
I was like, we need to change the
The
oil.
oil.
We need to change now.
Uh-huh.
Man, So you guys feel me? Are you feeling my pain? I know, Thomas, you knew in the game right now, so you don't feel the pain yet.
I'm
Oh,
gonna
yeah.
feel the pain because I'm gonna know, man, it's about time to get this stuff done.
Right.
Man,
And that's my job.
Right.
I gotta start setting like a calendar appointment.
Yeah.
Like, okay, I changed the oil this day.
Right.
You know, in about 3-4 months, I put it in the blend, the synthetic blend in my truck. And so I'm gonna go like 4 months, put it in there, like, okay, and it's probably time to change the oil. Maybe I need to tell her, oops, I said I use the pro now, didn't I? Maybe I needed to tell them that I need to go take the car to oil change. That's what I want to say.
I think we should have a conversation.
Rod just wanted to put up an indicator. He says we're just as bad with health indicators and relationship red flags.
But you know,
Hold on. Who that was? Who we talking about?
That was your boy, Rod.
I'm trying to save money.
All right.
Look, here's the segue, Earl. Here's the segue, Earl. Here's the segue. I'm trying to save money long term by, getting the oil change on a regular basis. I'd rather change the oil than get a new engine. I'm just going to, there we go.
There we go.
Amen.
T. Murray in the building.
Amen.
I don't want a new vehicle in 2024. I'm dropping in I don't got that kind of cash on me. I'm not like Big Kaneen, balling and all.
Don't say that.
76,000 miles on it.
Hey, did you notice that when Kareem said, "Don't say that," he did this. He's I was like, what he was really saying is,
let's rewind.
He was confirming he got it like that, but he don't want everybody to know.
Right.
Let's rewind the last 30 seconds. Who the hell is Kareem?
Right.
Kareem. You said Kareem.
I heard it too.
Did I say Kareem?
Kareem. I'm just back up now.
Hey, y'all need to run that Negro off, whoever Kareem is, because he ain't right.
Look, don't try to hide that you hold.
As I prepare for the new year, I don't want a new vehicle in my preparation right now. I'm not ready right now. I'm not at the end of this year.
Right.
Oh, I feel you, man. I feel you. My wife been putting pressure on me. I might be getting a car note. I ain't had no car note in 7 years. You know what I'm saying? 7 years, man. You know what I'm saying? I'm like,
brother.
I might have to go and get that note, man. I don't want to get that note. I'm kicking and screaming. I'm trying to do some extracurriculars, so I ain't got to get that note. You know what I'm saying?
That's the extracurricular.
But it might be going down.
Jeff says one thing, oil lights are programmed to come.
What, the interest rate?
5,000 miles, but if you use high mile synthetic, that oil goes 10,000. So learn how to reset oil maintenance life. YouTube. All right.
Jeff ain't tell you no lie now.
It depends on how hard you drive your car too, though.
Right.
You can't just
right.
go.
Oh yeah.
If you're doing normal round the city driving,
you open that can of worms there. Stay out of there. Let's not go. Let's not go there.
Tell them why you're mad, son. Tell us why you're mad, son.
So again,
what's up, Reese? My pronouns are
your
funky.
Cars will take care of you if you take care of them. So that's all I think.
Nice.
Oh
man.
I don't ride my brakes.
Oh, we don't even talk about that.
You're not gonna go there.
This show going there. Earl T. Murray in the building.
Earl, it's so good to see you. See a little bit.
Murray in the building. Good.
Earl T. That's what I'm talking about. Well, man, which one we got with you now, Earl? What's the name of that young lady right there?
This is Ilana.
Elon, okay, cutie. All right, I ain't mad at you.
Ilana.
Hey, Earl, can you get these fellas in line because they about to lose all their money. They talking down on their wife. I don't understand it.
No, who's talking down on the wife?
I'm not
Hey,
saying.
you keep on saying about changing that oil, she gonna change something else.
Changing rings, changing addresses.
Why you do
Oh
that? Why
man.
you say that? You play too much.
Right.
Hey, Larry, go ahead and get that disclaimer right now. It's all jokes, baby. Go ahead and get that disclaimer.
Little jokey joke in the morning. All right. I got it. All right. Earl T in the building. Appreciate you for being here. Our financial guru in the building. Had taken a little time off for some rest. Appreciate you coming back and hanging out with us. So, what you got for us this year? What you got for us today?
Yeah.
Man, he said
So,
this year.
well, yeah. Well, so good thing is that the year is almost over, and so what I would say for many people, you're beginning to shut down, but before you shut down, you want to make sure that you got all your ducks in a row, and it is a part of that, especially for many folks. If you own any type of business, is having some type of tax plan in your wheelhouse to be able to speak to your tax advisor, tax professional that you may work with, or even speak with us in terms of, what are some things that you could be able to do that can be able to help lower your tax bill. Every year I come along with someone where they may not do tax planning, and they've made some great money. They could have sold a house, they've done great in sales, and depending on what your situation is, you could find yourself in a heavy tax bill. So one guy in for example sold like a property, huge. It was in his business, huge profit. Didn't think about it because he sold it like within the last 2 weeks of the year. No tax planning, no preparation of it. He thought that, cha-ching, this was a good game day for me, where I could be able to like celebrate Christmas with my family.
Right. Man,
it was time for to do this man's tax return, and we was talking about a multi-5-figure tax bill.
Woo.
And meaning like, there's a 10,000 you could do for each of your 5 fingers. So, and so while your situation may not be that extensive, it's just really having the conversation, meeting with your people, to be able to say what are some things I can be able to do to be able to help bring, what can I do to bring this bill down, or where do I stand as a business owner. For some people, let's just say you are not a business owner. Have you maximized in your 401k, your TSP? Do you have all your documents together in terms of being able to itemize versus doing the standard deduction? And so these are looking at ways in terms of how you can bring your tax bill during the course as we begin to close out 2023.
Nice.
So I just wanted to kind of get that there and see if anyone had any commentaries and things like that before we talk.
In this last was a week, maybe 2 weeks, kind of.
Huh?
Sort of. I said like 2 weeks before the end of the year.
Yeah.
12
days.
So would you say like, I guess when it comes to large, not purchase, but large sellings, right? Because the idea is trying to offset your taxes, right? Basically, like because it's old period, but it's offsetting the amount, because all of us, we haven't earned income, but each one of us is trying to find a way to reasonably offset every bit of our taxes, so that we can either get more back or put it or somewhere where we need it to be. What are some of the tips that you would suggest as far as offset, like some of the for the regular schmegular guys, where's a great place to offset taxes? Because I know, like, if you're doing your taxes when you're just doing a W-2, and cost one thing, especially having a tax professional do it and itemize changes kind of how things worked as well. So what are some tax tips as far as offsetting taxes, period?
Yeah. So look for the person, and I'll start with the person who doesn't have a business. That's one thing you can begin to look at is your charitable contributions.
Okay.
For most people, if you're a member of a church where there's a tax incentive, for lack of better words, to where you be able to pay your tithes and offering, and it helps you tax purposes, and whether it is whether the church or whatever religious organization you're a part of, maybe there's another organization that you may be affiliated with, or other nonprofit, you can be able to be able to give to those types of entities.
Right.
And
Let
that's
me ask you a question, Earl.
Yes, sir.
So what dollar amount do you think for somebody with a W-2 that would flag an audit from the IRS? What now this is just medium income, someone, middle class, no high income earners, just middle class and below. What's the number of charitable donations that would flag the IRS?
Generally anything that's over 50%.
Okay, so if you make $80,000 a year and you say you gave a charitable donation of at least 10, that would be acceptable.
Yeah. You made 80, you gave 10. That's fine. Yeah, that wouldn't be an issue at all. Now they can come after you. They can inquire about any dollar amount, but when you talk about substantial, a certain amount of your income, yes, they may inquire. But if you have all your receipts and information together, and usually that's going to come from the entity where you give the money to, then that shouldn't be a problem.
So if like you said, 80, well, 80, and I give 40, that'll be a flag, basically. If I make 80 and I give 40 of that.
Well, so yeah, so you can be able to contribute up to that amount without having the deduction to, probably roll over or not be excluded or things like that. It's generally somewhere around 50% you can be able to contribute.
Oh, okay, up to 50. Okay, I got what you're saying. Okay.
So yeah, I would definitely stick to around those amounts, but most people, they may or may not, considering the regular average homeowner, I mean the regular general person is probably not going to give 50% of that. It may be somewhere between 5, 10, maybe 20% of the income, and that's probably where we're going to top it off at.
Yeah, Earl, when you talk about the doing the charitable donations, right? Look like your charitable donation. You mentioned tithes. Well, whatever your giving is, if you belong to a church or you donate to a church. We say the other thing is like, let's say the whatever donations due to the Salvation Army, like you might want to call them up and like donate some gear, and then because they give you that blank form. What are you allowed to put on that?
Yeah.
the
So
blank form.
when you get those forms, right? What you're going to usually give with those is, you want to, when it's tax time, you have to give an estimate in terms of, when did you purchase it? What's the condition of the clothes, of the items that you gave? And then when did you make the donation? Then you have to give, how much did you purchase it for? What was the condition? And then, what was the value? What is the value method? When you use the method in terms of tax preparation, you usually use what's called thrift shop value. So like if it was going to a thrift shop, what would be the value of the items, in which is usually and how much it would be like resold for, as like a good guesstimate. So let's say
my clothes appreciate though. my clothes appreciate. What are you talking about?
They're vintage.
Yeah. Once it graces my body, it's done. It's
growing in value.
Value.
It goes up, huh?
Hey, make sure you can document that on paper, huh?
All right, appreciate it.
I do have a question. At what point does a deduction or a giving deduction really make sense to offset tax purposes? Like, is there a percentage? Like, I got this tax bill, I'm going to give so much to offset, but if I give over, it really doesn't impact, or is there a point that it doesn't impact?
Yeah. So for 20, so it depends on your marital status, and so for if you're single, it's like somewhere around 12. It's just under 13,000. And then for married, it's double that amount. So it's like $26,000. And so what that means is that you get that deduction automatically as a standard deduction.
Right.
If you have things that go over that amount, then that's when you can be able to itemize. So most people, if you are a homeowner, you have homeowners. So you have your mortgage interest, real estate taxes, your state withholdings from your job. Depending on where you live in the country, those three alone could possibly exceed $25,000, especially if you're married.
Okay.
They do.
And then when you add charitable contributions on top of that, then then that really puts you in a position where you can be able to itemize, so it can reduces your taxable income.
All right. Now, if you're a business owner, that standard deduction and the other itemized deductions and everything else, what percentage of the deductions offset your tax bill?
So for the business, so it depends on how the business is structured.
Say you're single member or
a single member
LLC.
So for single member LLC, your contributions is still going to roll through on your individual tax return. So it's going to kind of work the same way.
Yeah. What about for multi-member LLC or something?
So same concept. If you make contributions through the partnership, those deductions are excluded, and then they're split amongst all of the members, and you use that to deduct on your personal tax return.
Gotcha.
Okay. Jeff said, how important is it to have receipts?
It's very important, especially when you make large purchases, to be able to have the receipts. And what I would say in this modern age, if you don't have the receipt, at least scan it in. You can be able to scan it in, save it to your desktop, put it on a Google Drive, so that if you are ever audited, then you have those things available.
Right.
What I would also tell people, scan it and then you can discard it, but also you can have a copy of your bank statements, anything that can be able to justify what the purpose of that expense would be.
Okay. So just like larger purchases, definitely.
I mean, you want to have it is for as much as for all of them, but especially if you're going to have a loss and you're going to have a big loss.
Right. Oh, so Jeff did that. I'm gonna ask he was asking for a friend, but he said, is alimony still deductible?
No.
In 2023?
No.
The answer is
it
no.
used to be.
Okay.
So you can be able
no longer deductible.
Yeah, it's no longer deductible. It used to be a deductible, but it's no longer.
So Earl, I got a question. Let's say you were supposed to make a certain amount of money and you didn't get paid that amount of money. And so you have, I'm supposed to get paid $60,000 this year and only got 20,000, and I'm not going to recover that other 40. Can that be used against your tax bill?
So if you're on a cash, like let's say if you're on like a cash basis for tax basis, but cash basis of accounting for tax purposes, in which most people are, you would only recognize the 40 anyway. So you could, if you had an agreement and you had all the information for the person, you could be able to issue them what's called a 1099-C, which is a cancellation of debt. And the cancellation of debt is where they have to recognize the difference of the 20,000 as income to them because you wrote it off.
Okay, so the same scenario, well, similar scenario, where you are you have real estate, and let's say you don't collect rent for you haven't gotten rent for like 3 months.
Mm-hmm.
Is that considered? Is that?
So a couple of things that you do, you probably have to go through the courts to see if you can go and get those funds collected, and that's your first course of action.
Okay.
Go through the course, see if they can be able to if you can go and get that money taken care of. If not, you could possibly get it put on their credit report or some type of lien, maybe.
That's not deducted. It's not a deduction you can.
Yeah, because you're only taking care of the cash.
Well, I still not pay that mortgage.
Right. So the mortgage is the mortgage interest is your expense, and you got the depreciation, all that good stuff.
Right.
All right. Cool.
It's tough.
All right. We want to go down that. So, all right. I'll tell you how can we prepare for next year.
So preparing for next year, especially, I would say, for whether you are in business or personal, has some type of budget where you can be able to start off being able to run your business. And I believe that, for some people hate budgets, but the reality is that a budget I consider as like a financial plan that's going to help you to accomplish your goals.
Right.
And it kind of gives you the blueprint. So it's like, okay, I know how much I need to be able to. Most people know how much, what I want to spend my stuff on.
Okay.
But for sometimes as a business owner, unless you're in some type of contractual agreement or some type of recurring revenue, you don't know where the money is going to come from.
Okay.
Preparing the expense side helps you to where you can be able to start setting some sales goals for yourself. And so if I know that my expenses are $17,000 for the month, then I may want to go out and try to get, 30, 20,000, 30,000, 40,000, set that as my sales goals. And how do I get to that point? You say that, Earl, that's a large number for me. Hey, drop off a zero.
Right.
The same concept. How do I now get to this to the couple of $1,000s a month that I need to be able to cover my expenses, and how do I really get there? And it's when you kind of set in sales goals as a business owner, it's not just kind of throwing some numbers on the paper. It's just that, how many events do I need to put on, or do I need to attend so I can be able to meet this goal? And in order for me to get this, how do I get, what's my level of time and effort do I have to put in place so I can be able to get to this number?
Okay. So setting those goals to know where you're trying to reach. Okay.
Yeah.
Go ahead. You about to say something? Sorry.
And then on the personal side, for some people, whether sit down and decide, am I trying to pay off, student loans this year? Do I want to take a vacation? What are these things? Many of us, we just kind of live for the money. Bless you. And so how do we now enjoy the money that we earn?
Right.
And so maybe it's, I want to take 2 vacations a year, and you may not want to wait until July and August to be able to do so. I may want to take one in March. I may want to take one in April. I may want to take one in November. Whatever the time period that you're in, you do it, but you prepare for it.
Gotcha.
And so it's just looking at kind of like as a husband and wife, or as whatever your situation is, and you begin to kind of prepare for those things. For some people, you may just need a new job, where you can be able to make more money, and that's cool. But at least you have a plan that's going to tell you that I don't make enough money, and I need to bounce. And it's for some people, you may be able to go and get a promotion. You may need to go do other things. Or it could be your side, or your side hustle, or your business that you have could be able to help to supplement your income.
Speaking of side hustle, if I'm starting a side hustle, I don't have a business structure yet, can I still write off those expenses?
You just write it off as a sole proprietor.
Okay.
Because as a sole proprietor, you don't need an LLC structure or any of that. You're just doing that, and it's attached under your Social Security number. So
as a sole proprietor, you still should itemize your receipts and make sure you track.
Yep. Because it could be to your advantage.
Okay.
And the best way to, track your receipts is, I don't get anything from this, guys, is using Amazon as your supplier.
Use what?
Using Amazon as your supplier, because you can go back and track your receipts.
I thought you were gonna mention another party.
I thought you had an app or something.
Yeah,
use an app.
I use an app. I use an app called Invoices Simple, right? So Invoices Simple.
Okay.
Invoices Simple, and I build my invoices out when I'm billing my clients, but at the same time, they have an expenses tab that you just plug in each thing, and then you just look at it, and it shows you your expenses versus your the money you're taking in. And
so I learned something a while back, and I used to be cheap in business. You can't be cheap in business, and so
again,
you can't be cheap in business. You gotta be able to track some stuff. So QuickBooks has a lot of tools and
Right.
you know, online and invoicing and collecting money and tracking and mileage. All that is you know, one price in QuickBooks. And so you know, if you're just beginning, you're like, I don't have it. It's benefit to have, you know, that, because even all the tools that you pay for, you can write off. As Larry just said, he uses Amazon for a lot of things. So guess what gets written off? His Prime membership. You know,
right. Look at that.
Written off every year.
yeah.
Every year so I have a room dedicated to my office, and so you know, that square footage in the house gets written off every year. And so there's a lot of different little things that you can write off that begin to offset some of those tax bills and everything else. And so if you do have real estate, make sure you depreciate every year. That depreciation cost comes in handy because
very handy.
When you every year, you're probably not going to use all your depreciation in the year. So the following year, it gives you a cushion on how much you can earn, you know, for the next year to offset your tax bills also. So there's so many different tax loopholes that, you know, and then the final thing I will say is don't be cheap with your taxes. If you do have all these things, get you a good person that can help you with your taxes, because they know all these things. They stay up on the laws and everything else every year, and they know things that you ain't gonna know. So,
but Thomas. So Earl told us a while back, you know, you have a space dedicated for your office. You write off the rent that you would charge yourself to use the space. Or did I miscomprehend that?
So you have the utilities. So you have all the utilities.
Right.
So the utilities, the depreciation, your mortgage interest, you have the
your internet,
the internet, gas bill, all that stuff you can be able to write off as a portion of your expenses, because that in essence would be like the rent that you would pay that your business would incur. As a result of you having your office space. Now, let's just say if your business had like a virtual address or something like that, you could be able to create what's called they have like where they have what's called the Augusta rule. And the Augusta rule says that you can be able to rent out your space or rent out your home up to 14 times a year, and you could be able to get that money tax free. So some business owners, they will be able to, you know, say, have meetings at their home where you could be able to, your business could be able to pay you a certain amount, like a daily rate, and you could be able to pay yourself that amount that you would charge.
That's
and you, the individual, will get that tax free.
What's up, sir? Dr. Thomas.
Yeah. So one of the things you want to be careful is you don't want to run it up and then get audited, because there's certain square footage that they allow per space.
You don't want somebody coming and scrutinizing, and then you lose it all. So that was going to be my question. So like, you know, my phone bill, right? Like, what is the percentage of usage? You know, like let's just go to the measurement. What is the percentage of usage that is allowed?
It's based upon your percentage of usage that you use it for your business. So if you use it 50% for your business, then it's 50%. If it's 75%,
it's the amount that you feel.
It's based upon how much you use it for the business. And if you can justify it, you can justify it.
Right. I got you. I got what you're saying.
And that's the interesting thing is that, you know, when your phone, if it's an absolute need, like I don't have a home phone, so it's an absolute part of my business. I use it 90% of the time for business. Do my kids still call me on it? Yes. Do I still get personal calls on it? Yes. But it's 90% of it's for business.
It's your business line.
It's my business line. It's
it
is what it is. My business phone, the phone number on my business card comes to this phone. And so it's, And then that part right there, I remember back when I first started my business, I was like, I'm just going to use 15% as I'm gonna write off 15%. And then I started pumping that number up because I was like, I don't use, but then I was like, I can't do my job without this phone. I need this phone. And this is the number that goes, that's 90 to 100% written off now.
Right.
And so even like if you pay for, let's say you pay for an iPhone or something like that, even the cost of the actual phone itself is a part of a part of that business deduction as well.
Right.
So this to run that, I make sure I got a separate phone altogether for the business, so that it's 100%.
Gotcha.
Mm-hmm.
Okay.
So like one thing that I did like for sometimes I didn't want everyone to have my cell phone number, even though like I use my cell phone pretty much 100% for business. I went and got one of those Google line, not Google Voice numbers, but no, GoDaddy. GoDaddy has his phone plan where you get a separate phone line, and I don't have to get a separate cell phone. And so, because I didn't want to carry around two cell phones, so I was able to do that, and it just works fine for me.
Nice.
Oh,
so I have a question from Jeff.
So I do have a Google Voice number on my phone, and my phone number, and the Grasshopper. So I got 3 numbers that come to my one cell phone. So, it's possible.
Is it possible?
So you're going to create a business. So you're always trying to create a business in the purposes of creating a profit first. Now, if you get a loss, you have other things, then those things happen because it's the ordinary course of business. But in terms of just being able to, you have to be able, your intent has to be trying to make a profit, and 2, you have to be able to have assets to be able to write off.
Yeah.
Nice.
She washed it off. So you got to be able to have assets to be able to write off, and that's either ones that you pay for, or you donate them to, or you contribute them to the business. So, and some of your,
I can't with you.
So, and so, like using your example, like you could take vehicles, things that you would have for the business, allocate those resources to it, and use that as a write-off. And that's straight legit, because some people would do that, depending on what kind of business you have. So if I have a vehicle, I'm going to use it for business that I already have available. $20,000 car, and I can depreciate that over 5 years. That's a $4,000 deduction for a vehicle that I already had available to be able to use for my business.
Gotcha. Okay. Awesome. All right. I think we've delved down the tax space quite a bit.
I have one more question.
Yeah, no, go ahead. I was just going
I can't recall what it was, but I heard that there's some type of benefit for filing single this year that's different than other years in the past. Have you heard anything about that, or for those who are filing single?
Maybe I haven't off the side of my head. Generally speaking, and this is all based upon individuals' scenarios, most people will generally benefit from filing jointly than separate. Married filing separate. Like if you're married, you can't file single. You can only file married filing jointly or married filing separately. And so generally that's the case. There are some scenarios where married filing separately is a better scenario, but that's on a case by case basis.
Okay. Awesome. If anybody out there has any other questions, we're going to begin to.
Well, just for the record, I had that second phone is because I used the camera capabilities and all that other stuff too for the photo. But it's totally for the business. And yeah.
Yeah. Okay.
Not walk around with two phones. I don't walk around with that phone, and I would miss the calls.
You leave that one in the car in the trunk. Okay.
That's not bad. Oh gosh! Come on, man.
So we appreciate you guys for being here. First with the car stuff, and now with the phone. All right, so we appreciate you guys for being here. Rocking with another edition of the Brothers of Legacy. Thank you guys for supporting. Listen, I put the link to connect with Earl in the Facebook and the YouTube. It's pinned at the top. Make sure you guys are clicking the link, following Earl, and in there it says schedule a session. If you feel like I got some deep questions, I need some time with Earl so I could pick his brain. So go to schedule a session and you guys work that out. Everything ain't free, so be prepared. Let's see. He said, can I move my ex to a deserted island? Seeing how alimony is deductible. Don't answer that, Earl. Don't answer that.
I'm not.
I ain't messing with Jeff. All right, so listen, we appreciate you guys for being here. Thank you for Kaneem and Brian for coming on. I know Brian is in the midst of birthdays and anniversaries. I was surprised he was even here. I appreciate him for just showing his face. So he said, anybody need a girl? All right, y'all. We look forward to seeing you guys tomorrow, Mental Health Wednesdays. Again, make sure you stay connected to Earl. Click the link in the pinned comments. And if all hearts and minds are clear, we look forward to seeing you guys tomorrow. Know that Dorothy said schedule a session. He said, if all hearts and minds are clear, 988, if you or someone you love is having a mental health crisis, make sure you dial 988. Make sure you stay safe, make good choices. We will see you in the AM. And as always, know that we love you. Jesus loves you better. Peace out.